I came with a specific request.
I heard the word Bitcoin. Why do people even trade manually at all? Well, it's your own fault you set something up wrong, right?
I have people in my circle who could easily throw in $1 million.
Well, let them put it in. Everything will work fine.
I have clients with deposits $100,000.
He'll take 20% of that.
The win rate there is 85%.
Algorithmic trading is more often than not a business.
By the way, I got 10 some kind of bonus dollars credited to my account there. How do you analyze on-chain using GPT?
We haven't had a single liquidation.
It turned out to be a scam, right?
We are not as simple as we might initially seem to be.
I welcome everyone to this podcast. My name is Trish. Today, we've gathered in the studio with Dmitry Biryukov to record a podcast on the topic of algorithmic trading. I've been interested in this topic for a year now. I consciously got into this last year because nowadays, automation and artificial intelligence are things you really need to use, since these technologies have already developed significantly. So I've been testing different algorithms, and I met Dmitry at the Crypto South conference in the city of Gelendzhik. And in fact, even after just a superficial look at what his company RoboTraders does, I became interested. And in fact, on the first of the month, I already deposited a test amount of $5,000. And I'll be observing, monitoring, and sharing the statistics publicly, as I like to do, testing everything with my own money. So, Dmitry, I'm glad to welcome you. Nice to meet you.
Hi, Jan. Hello.
I know that you've been involved in algorithmic trading since 2015. That's quite a solid amount of experience, a lot. I actually encountered the topic of trading bots for the first time in 2018. There was a company called CV Global, if I remember correctly, and they also allowed you to connect Binance via API keys, would pick up altcoins, and in fact performed quite well for some time. But when the bear trend started, everything got drained, and those altcoins were down by 80-90%. At that moment, I realized that the ones making money from trading bots are those who sell them, not those who use them. And if someone does use them and actually makes money, then those bots are either very expensive and unavailable to the mass market, or they aren't sold at all. And with that thought, I left behind, so to speak, the idea of making money with bots and started learning to trade on my own. And basically all this time I was trading up until 2024. I heard you tell a similar story from the stage, that most bots end up losing money sooner or later, right? We'll talk about that as well in a moment. So basically, last year I really came with a request. Well, I started expressing my intention to the world to find truly working algorithms, since these technologies have advanced so much now. And basically, I'm successfully testing one algorithm. I dismissed several others because the risks were just too high. I don't like that. I'm not really after super high returns, but I prefer stable on, say, 10% a month. I think that's an excellent return. And looking at your algorithms where you have a 250% return for 2024, that's even more than I would want. Right. And moreover, what I really liked is that this isn't asset management in the usual sense, or rather it is asset management, but it's account-based asset management. That is, you allow people to connect your trading robots algorithms via API keys, right? And accordingly, the money stays on my exchange account, and the only risk I take is with the trading itself. Like if there are some market conditions where the robots, for example, can't handle it and there's a drawdown, that's the risk. I'm not taking on the kind of risks you have with traditional asset management, right? Like losing everything all at once. So tell me, how did you get into crypto and what led you to algorithmic trading?
Well, first of all, thank you for having me. It was really nice meeting you at the forum, yes, at Crypto South. Overall, the story is actually embarrassingly simple. It's really no different from thousands of other stories. It was 2017. I heard the word Bitcoin. A friend explained to me how to buy it. Back then, I registered on the Binance exchange. I bought something, the equivalent at that time of about 5,000 rubles, roughly speaking. I made a profit. Bought a bit more again, just for a small amount. And then everything crashed, so to speak. That was my first encounter with crypto, and pretty quickly I realized I needed to learn more. So I found some guys of the largest crypto communities in the CIS. They're still around and doing quite well. At that time, they were launching trading courses, so I jumped right in. Honestly, compared to the educational products available on the market now, it was extremely basic, but at the time, it was more than enough for me because I learned about trends, candlesticks, just some basic stuff, and I thought, well, that's it. Now I'm going to beat everyone, basically. Well, of course, I was wrong. I lost some more money and completely by accident found out that there are robots, some kind of bots. And at that moment, I had this thought, why do people even trade manually? I mean, if there's a money button, you can just turn on and it works for you. And actually, there were already quite a lot of them at that time. I went into the Forex market and got burned a huge number of times because I lost money on the algorithms themselves. I would buy them first and then lose the money I had spent on those algorithms. That's how it was. But the very idea of automation just wouldn't let me sleep peacefully, so to speak, because I basically never considered manual trading as an option for myself. And moreover, since 2020, I haven't opened a single trade manually up to this day. Not on futures, not anywhere. Well, I don't count long-term spot purchases. But manual trading itself is just taboo for me. Basically, for the last 5 years, and it just so happened that in the year 2017, which was quite an exceptionally eventful and significant period of time for me personally, I encountered some truly remarkable individuals who were diligently creating a sophisticated algorithm at that particular moment in time. And what truly and profoundly won me over completely was their innovative and thoughtful approach. These were people with background in mathematics, not some info gypsies showing off random test results. In other words, they were doing this purely for themselves. They came from the stock market. So in a way, they were kind of conservatives, right? And they moved into the crypto market because it was already becoming a trend back then, the beginning of it. Yeah. With the idea of partially automating their manual trades based on their own strategy. Yeah. And as often happens, they got really into the coding part. Yeah. So initially, they were creating a trading terminal that could partially automate some processes with just 2 or 3 buttons. But they got so into it that they ended up fully automating the process of buying, selling, and signal selection. And in 2017, the first test algorithm was released and made its first trade on the Binance exchange, which at that time was only a spot market. Yeah. And I guess because of my strong curiosity, I started working with them actively. I mean, first and foremost, to gain experience, because back then I was still pretty green, you could say. And I found all of this really interesting. I started to see that it actually worked, that it was, well, a really cool thing. Although, if you compare the developments we had back then to what we have now, it's just, well, night and day, so to speak. That's it. And so we started working productively together. Plus, more people started to join us, right? Also, enthusiasts, just like us. A team had already formed. And so by 2019, we had reached the point where we had a truly great high quality product that worked well and was performing strongly in the market. And we decided to move towards a trust management format. Yes, exactly what you mentioned, that this is kind of a downside overall. And we worked quite successfully in this format up to and including 2022. So it was a fairly closed operation. It was a pool of private investors with large deposits. At that time, more than 10 million USDT was managed by our algorithms. And this entire sum was managed precisely with the help of our algorithm. That's it. But as you correctly said, there are 2 main drawbacks to trust management. The first is the lack of liquidity, because the funds are with us, right? And basically, a person can't just do whatever they want with their money at any moment. So there's a lockup period, there are early withdrawal fees, right? And a high entry threshold. For us, the entry threshold was 50,000 USDT. So basically, we didn't consider anything less than that. And by 2022, we decided that we needed to eliminate these drawbacks. So first and foremost, this was aimed at the guys in trust management, those who were with us in trust management, so that we could leave them our technology, meaning our algorithms, but transfer their funds back to them. In other words, simply by connecting our algorithms to their exchanges via API. So at that particular point in time, again, we continued with a kind of trust management format, primarily because we explicitly stated that's it. We are definitively ending all deposits and promptly returning all of your invested funds to you. If you want to keep working with us and our algorithms, then register on the exchange if you haven't already, give us your API keys, and we'll set everything up for you and manage your deposits. Because, as I said, the pool of investors was quite small, well, relatively speaking, right? That's it. And so we started moving in this direction towards more transparency, right? And later on, by the 1st of June 2024, just recently, we marked 1 year. We reached the point where we had developed a shell, created an interface, built a platform, and went public specifically to give people the opportunity to use our product. By doing this, we eliminated two significant drawbacks of asset management. All funds remain in the client's account on the exchange, with no possibility of withdrawal via API, which is important. And the second is the minimum entry threshold. So as of today, if you're talking about spot algorithms, it's from 200 USDT per algorithm. And if we're talking about futures, it's from 400 USDT per algorithm, taking margin into account.
Have you had any screw-ups or losses? Did you ultimately decide to switch over to using API keys because you had experienced some failures, or what exactly was the reason?
Number. It wasn't about failures. The point was more about, well, you could even say the burden of a certain responsibility for the funds. Because one way or another, users still worry when their money isn't directly under their control. So that was basically the main reason, yes. Why? Plus, I won't hide it. Of course, 2022, we all remember that was the start of the bear market. And there were certain geopolitical events as well. And people in general needed money. They needed liquidity. So many people simply withdrew funds for their own needs. So that's why it was really a turning point for us, a year when we basically had to reformat our entire approach.
All right. And what are your goals now? Do you have, I don't know, a target to reach a certain capitalization?
Listen, as for capitalization goals, let's put it this way, there isn't a specific number, though of course I have one in mind for myself. But here, the more the better, of course. So the primary and most important goal. I will name two specific objectives right away so that our valued viewers and audience members don't have any lingering doubts or uncertainties whatsoever. There are indeed two distinct and significant goals that we aim to achieve. I'll name the first one, let's say the beautiful one, and the second, the practical one. The first, the beautiful one, is to bring high-quality algorithmic trading to the crypto market and to give users of any background, regardless of their level of knowledge, which is important, the opportunity to use quality algorithms and to earn passive income. That's really how it is. And our entire team is focused precisely on this, yes. Because we provide the user with a ready-made product, and first and foremost, we take responsibility for it. Unlike constructor platforms, where you're given the opportunity to set up the algorithm yourself, but if you make a mistake, they say, well, it's your own fault. You set something up incorrectly, right? And the second mission, the second goal is purely our own. And we even have this written on our website in the About Us section. So we're not hiding it. For us, it's an opportunity, of course, to earn more, and including, thanks to this, to improve our products. At the moment, we have a fairly large team, about 20 people. And these are people who come to work. They have salaries. In other words, we support them, we provide for them. And naturally, in order to grow, yes, actually, algorithmic trading is not exactly a cheap endeavor, right? Because there are a lot of expenses, especially on the technical side. So naturally, the ability of our company to earn more is first and foremost the development of our product. That's why we've come to this point. In other words, we are meeting both our own needs and the needs of the market. These are the two main missions.
But there must be some kind of liquidity threshold where you might wonder whether you'll be able to handle it, right? Well, let's say $1 billion, $2 billion, $3 billion. Will your algorithms be able to handle that? After all the algorithms enter at about the same time, right? And all the accounts accumulate the same volume. How does it work in this case?
Yes, that's a good question. Look, there are a few nuances here. First of all, the first and most important nuance is that we always tell all users that we trade the top 20 coins. Why is that? Where does this come from? First, low volatility. Accordingly, they are safer and have higher liquidity. Plus, we currently use two main exchanges, Binance and Bybit. These are highly liquid exchanges. Plus, we're about to add the BitGet exchange as well, which also has good liquidity. That's the first point. Because, for example, even if a relatively small pool of our users starts trading some altcoin using our algorithms, and we've seen this happen, we can actually influence the price. And that's normal. But for us, that's actually not ideal. And you have to understand that, for example, even if we have a large amount of funds under management, let's say, and even if the algorithm enters trades for many users at roughly the same time, it doesn't use the entire volume. So, for example, the entire allocated volume for the algorithm can be split in its logic into 6 to 12 parts. In other words, if you activate the algorithm with, say, $10,000, it won't enter the market with the full 10,000 at once. It will take smaller portions. So we're already spreading out our purchases. That's the first thing. Secondly, there's also the point that, for example, algorithms have built-in order book monitoring. And if, say, we need to buy up a certain large volume and the system recognizes this, we can further split a single purchase into several parts. This is also visible on our charts where you can see the algorithm making purchases. So, roughly speaking, it can execute its stage of work in about the same area through several purchases. For example, if there's a liquidity shortage. Although, again, on top coins, we haven't really seen such situations so far. And then the third point, one way or another, all users launch the algorithms at different times. And accordingly, yes, sometimes the situations do get synchronized by the market, but still, more or less, it's extremely difficult to find two completely identical accounts. So, one way or another, everyone has some differences, even if they're small. Liquidity, as a rule, is constantly flowing.
Let's get back to the company's revenue. What percentage do you take? Are your robots paid, or can someone connect for free and test them out?
Right.
Is there any kind of subscription?
Got it. When we went public, yes. And actually, the topic of my presentation at the forum was directly related to this, why 80% of public algorithms end up losing money over time. And one of the reasons I talked about was that algorithmic trading is more often than not a business rather than about trading itself. Because the money is made from sales, from referral programs. So very often you see situations where, well, it's free, but you just need to sign up under us or join through our link, and that's it. And here, of course, first and foremost, yes, here's a kind of life hack for the viewers. There's actually quite a big checklist. I can pass it on to Jan if needed, how to tell, yes, a scam in trading from a non-scam. But one of the main points is this. If the algorithm lost your money, who profited from it? Just ask yourself that question. So before you want to connect to something, whether you've already paid, or accordingly, someone will get a commission. Yes, either the person who brought you in or the developer, right? That's why when we started going public, the first thing I encountered was total distrust, because algorithmic trading is generally seen as being close to a scam. And here you just need to take an ethical approach, in my opinion. And our ethical approach is that, first of all, we don't sell algorithms, and we don't take any upfront payments for connecting. We don't have a single referral link, either on our website or anywhere on social media. So we just have instructions. That's it. If you already have an account, please proceed to step 2, which is the corresponding setup. And this fundamentally changes our motivation because, of course, we're not altruists. We charge a 20% commission on the profit generated by the algorithm. So only if the algorithm closes a profitable trade for you on your exchange, 20% of that profit is our commission. And even then, since we don't have access to withdraw funds, the user pays us this commission themselves through their personal account. In other words, the user tops up their internal wallet, and we gradually deduct our commission from there.
Can I ask a question right away?
Yes.
Let's say I deposit $5,000. The algorithm works for a month and earns me 10%, that's $500. I pay you 20% of those $500. And in the second month, the algorithm works and let's say it loses those $500 and even goes negative, say, by another $500, right? So my balance becomes $4,500. In the third month, the algorithm is profitable again. And let's say it earns $500 in a month, so I'm back to 5,000. So from these $500 that it earned, do I pay you a 20% commission again?
Yes, I understand your question. That has happened too. It's a bit of a trick question, let's put it that way. look, the algorithm we're offering now, it doesn't include the stop loss, right? So it manages risk through position size. Accordingly, by the way, for example, since 2021, when we introduced margin algorithms, that is with leverage if you follow the recommendations, we haven't had a single liquidation, even though we've always traded only long. That is through bear markets, all the crashes, FTX, scams, all of that, right? We only introduced shorting just now in January. And so knowing these statistics and the recommendations we give, which are actually very simple, it's trading top coins, that is the top 20, right? A portfolio of about 15 or 16 coins. So not just 3 or 4. This is so that its stability is higher, right? And third, yes, is having collateral. That is for leverage trading, at least 100%. That is relative to the allocated amount. Under these conditions, we haven't had any liquidations since 2021. And accordingly, if, let's say, a user added some coins, something unclear, and, for example, on isolated margin, they got liquidated. Have we had such liquidations? Yes, we have. I'm not hiding that. That's the market. The person clearly didn't listen. Why should we, as a service, if he doesn't listen, then not charge him a commission until he makes up his losses? And if he wants to close manually, we'll record the trade as a loss for him. Why he keeps using our server, our resources, and yet he won't pay us a commission? In our view, that's not quite right. But why did I specifically mention the strategy? Because right now we're also developing an algorithm with stop losses, and naturally with that algorithm we'll change our approach to charging commissions because, well, we understand that with stop losses, there could be a losing month or a profitable month. And naturally, we haven't decided yet, but we'll take a certain period based on the results of which we'll evaluate. So if this algorithm ends up in profit overall, say over a month, then we'll take 20% of that. If the person was at a loss during the month, then we won't take anything from them because otherwise it would be unfair. If they hit their stop losses, we don't give them anything back, but with every profitable trade, they pay us. So for the client, this kind of trading wouldn't be very effective. That's why this is our policy in this regard.
Let's talk about the affiliate program. I know you have one, but I haven't looked into it yet. How many levels are there? What are the commissions? How does it work for you?
Yeah, we do have an affiliate program, and there have been people coming in who really want to push it MLM style, multi-level. Honestly, I just can't stand all that stuff. We have a standard classic single level affiliate program. I don't know, maybe at some point we'll add a bit more depth, 1 or 2 levels, maybe 3. That's it. But right now, it's just a regular single level. It's 25% of the paid commission to users. So we don't take anything extra. We share what we have. So basically, let's say we take 20% from a person, right? And from that 20%, we pay out 25% to the affiliate network. Well, if you look at it another way, that's about 5% of the revenue. And the conditions for the affiliate program to work are that both the person inviting and the referral must each have at least 5 algorithms enabled. Only then does our system recognize the connection and on the first of each month credits the reward. Well, 25% is actually quite a substantial reward, especially with good volumes. And well, these funds are credited to your personal account. You can withdraw them or use them again to pay commissions, no problem.
And all of this works on a prepaid balance, as I understand it. So if I activate an algorithm, by the way, I get like 10 bonus dollars credited to my account, right? I also saw some $50 bonuses there. What's that about?
That was an extra bonus we gave for CryptoYug visitors. And we opened additional slots for them. So 40 were for extra slots and 10 were for covering commissions at the very beginning. So basically the $10 is a bonus for every user at the start just to try it out. So you can actually earn your first $50 for free, essentially using those 10.
So does that mean that now for the profitable trades I make, the fees will be deducted from that balance?
Yes, that's absolutely right.
Once it reaches 0, if let's say, I don't know, I lose connection, go off into the mountains, disappear for 2 weeks and miss that moment, will the algorithm automatically turn off after some period of time?
Yes. According to our regulations, you have 72 hours to top up your internal balance if it goes negative, right? After that, we reserve the right to disconnect the person from trading, but of course we don't do this by selling everything at market price through the API keys, causing a loss or anything like that. In other words, we put the algorithms into a drying mode, finish their trading cycle, earn a profit for the person, so they close in the positive, and then accordingly the algorithm stops working for them. But to be honest with you, and maybe I shouldn't even say this, we still try to reach out to the person until the very last moment. So we send them notifications, we email them, we check when they last logged in. Because sometimes it happens that a person hasn't logged into their account and hasn't seen that they're in the negative, right? And we actually give them a bit more time than 72 hours before disconnecting them, right? We try to reach out, but if someone is really being stubborn and we see that they're logging into their account but still not paying, then of course we'll disconnect them.
Can you explain how your algorithm works in general, or do you have more than one and switch between them depending on the market? For example, I noticed the fifth leverage. I saw that I can choose any altcoins, but there are about 5 or 10 that you recommend. Right. How does the algorithm work? What are its principles? What does it rely on? Technical analysis, certain indicators, volumes, or all of the above? Of course, just what you can share. Obviously, you have some trade secrets, right? Tell us what you can.
Yes. Well, first of all, look, basically right now we have essentially one algorithm, right? A universal one. We have it well. On spot, we still have a few algorithms left over from earlier times. They might need to be updated somewhere, but essentially our main core algorithm is just one. We have it on spot for the spot market and for the futures market. Moreover, about 95% of our users, I think, use it specifically for futures. Yes, first of all, it's more profitable. And secondly, as you mentioned, with 5x leverage isolated margin and our conservative approach, it allows you to trade futures quite safely, right? Many people are afraid. So I'll use the futures one as an example right now. It's our most advanced algorithm. And when we left asset management, yes, the second thing after free entry was simplicity for users. That is to provide a ready-made universal product, right? Because if we go, for example, to Bybit and select some robot, the first thing that pops up like on Bybit is a window asking what kind of trend you want the algorithm for, bullish, bearish, or sideways. And while you can determine the trend, identifying a trend reversal is much more difficult, right? And what will happen to that algorithm you launched for an uptrend if the trend changes? Exactly. And that's precisely why the fundamental task was to create a single comprehensive algorithm, because we deeply understand that the market landscape is inherently different. The key players consistently change and the overall market itself continually evolves, right? So it absolutely had to be a well-defined set of adaptable strategies, right? And in fact, that's exactly how the situation looks for us now in this current moment. So first of all, we use obviously technical analysis. We also use fundamental analysis. That means on-chain data, capital flows will monitor liquidity flows. Currently, as of today, you could say we have a single brain center where all kinds of information come together, technical and fundamental, right? All of this is analyzed by our neural network. By the way, we actually develop all the software for our algorithms ourselves. So we don't use any third-party terminals or anything like MetaTrader, like they do on Forex, everyone knows it. We have our own software, which allows us to implement absolutely any ideas.
May I ask a question?
Yes.
What programming language are these kinds of developments done in?
Mostly in Python.
In Python? Is the neural network in Python?
Yes, yes.
Do you use any engine initially?
Specifically, the neural network for data analysis. So, roughly speaking, our central hub receives streams for specific pairs from the exchange, right? And for the market as a whole, correct? This allows us, for example, to understand whether a specific coin is dropping or the entire market is falling, right? So, our trading will depend on that. Or maybe a specific sector is dropping, like DeFi or CEXs are falling, something like that. That's it. That's the first thing. And second, why do we need this? We aggregate the database of all completed trades over a certain period of time there. And because of this, the system, every time before exiting or entering the market, for example, refers to this center to understand what's happening in the market and how certain situations have played out. So basically, it's like a real-time optimization happening. This is our own specific technological development by our programmers. Well, as for programming languages, of course, it's not just Python that's used, C++ is also used. But the main one, specifically for the algorithms, is Python. As for the strategy, Yes. So the algorithm itself is just one, yes. As of today, there are 26 entry options into the market, meaning various variations, and 21 exit options. And even if you go in and take a look, all our trades are different from each other. There isn't some rigid pattern like a fixed 5% take profit or some kind of grid with a set step, right? And in addition, this is quite a recent innovation for us that has been working wonderfully using AI. And this isn't the kind of AI that every other algorithm is shouting about, like, I've got AI on board. Now, here we've used ChatGPT, DeepSeek, and Grok. Grok, for example, is really great at analyzing tweets and the sentiment on Twitter, which can also, especially with some altcoins, have an impact that can, for example, influence things like news. So news analysis works really well. I also showed at Crypto South during my presentation how it performs.
So how does Grok actually analyze tweets? Can it really browse the internet directly?
Yes, Grok can, when it comes to Twitter, it provides really great analysis. So, for example, someone can just go into Grok and ask a question about some altcoin, for instance, and it will provide a very high quality analysis, like who is saying what the general sentiment among people is. Or, for example, if there's some news coming out about a project, it can show that as well. Of course, this isn't the main foundation the algorithm relies on, but it's more of an additional feature because, let's say, the algorithm enters a trade, it's moving into profit, and then some news comes out about America, about Trump, about trade tariffs. Like the first time he started tweeting, and the market immediately reacted like this. And all the trades that were in profit at that moment closed instantly. But if our take profit had been set higher, we would have experienced a drawdown and would have had to wait for the situation to resolve.
Question. How often does Grok make these requests? I mean, to analyze things in real time, so to speak, you need to make a lot of requests constantly and process a huge amount of information.
Well, it's quite a lot, yes. First of all, they have a professional business package. So we also connect via API. Plus, we have this neural network, this AI, available in our users' dashboards. We've integrated it into personal dashboards as a chat. And right now we're working on version 2.0, which will even be able to analyze screenshots of charts. And what's important here, so we use the power of these neural networks, but we train our own agent ourselves. What do we need? How often do we need it, right? Basically, it's a list of certain public pages, certain influencers that are monitored, those who can potentially have an impact. Naturally, no neural network is going to give us enough power to send a request across all of Twitter every 5 seconds, right? So, as I said, this is, let's say, an addition to the main analysis, but still, it's like an anthill. This information spreads very quickly. Someone tweets something and it takes off, and the neural network can sense that. And that's what makes it, the key feature is that it happens very quickly at a speed that's simply unattainable for a human. Exactly. And that's exactly why, well, as I showed with the trades, it's just that the algorithm exits at the most optimal, most successful point.
All right, you mentioned Grok, it analyzes tweets. ChatGPT is an agent, right? An AI agent that you train by giving it the necessary information, and then you make it available on your website in a personal account so that each of your users or clients can interact with it and get some analysis. Is that how it's used?
Yes, yes.
And what about DeepSeek?
We use both neural networks for technical on-chain analysis because honestly, we might end up dropping one of them, but we haven't decided yet. We launched both in a test format specifically because we like the technical analysis that DeepSeek does more, right? GPT is more interesting for on-chain analysis. That's it. So, well, that's just our opinion. If we manage to keep just one, say, Grok and maybe one more, we'll get to that point. But for now, this is the option we're going with.
And how do you analyze on-chain data using GPT? How is that done?
You pull information from various services using API keys. Yes, from the blockchain. That's it. You train it on which metrics you're interested in, what they're currently showing, because in on-chain data, there are actually a huge number of metrics that are interesting for analysis. Because, well, many people now, for example, when Bitcoin broke its 8 after the ATH, it's hard, right? How do you even do technical analysis then? Well, you can draw an ascending channel, let's say somewhere around 125. That's where it'll hit the top, right? The ascending channel. But on-chain analytics allows you to look much deeper to compare historical patterns, for example, price patterns, and even say down to retail, right? For example, right now in the medium term, it's basically in the green. That ISOR, for example, in losses, or say the cost of mining here, can also, for instance, have an impact. I'm just explaining this to you now in general. So this can be certain points, like when the cost of mining, for example, because it exists, right? It's still one way or another, depends on the price of Bitcoin.
Also, can you mention which services you can pull this information from via API to provide it, say, to GPT?
Glance note is usually the main one, yeah. Specifically for the algorithm strategy, I mean, I already mentioned the entry and exit points. As of today, in addition to splitting up the volume, it results in a total of about 4,500 possible combinations for how it can operate. The strategy itself is that the algorithm initially enters with a fairly high frequency. In other words, it works like a scalper. That is, it selects and builds up a position on small timeframes. It uses minimal volumes from the amount allocated to the algorithm, and accordingly, if the price moves in our favor, it locks in profits either by take profits or by other metrics.
Let's take a specific example. Suppose we allocate $200 to one bot plus another 200 as collateral, right? Additionally, to add margin, as I understand it, so is it a $400 lot that we put to work, right? Or how does it work?
Look, 200, the allocated amount, you got that, right? That's the amount used specifically for the algorithm's purchases. So if we're trading long, that's the amount the algorithm will never exceed, and it will select its trade volumes based on that limit.
Okay, wait, I'll tell you right away, I'll ask her rather. Of these $200, what will be the first amount of the open transaction approximately?
It's always different, but as a rule, it will be something around $5 of user money on the fifth leverage, that is 25 somewhere USDT, will be the volume.
Yes.
The next one might be smaller.
But that's a little more than 10%?
Yes. So, as I said, there's no martingale or anything like that here. That is, the volume can be either less than the previous purchase or more, depending on the strength of the signal received. So, moving on, if we are in scalping mode, yes, with small volumes, as I mentioned, right now we are not using stop losses, correct? And we control risk through the volume. So this is the second method after stop losses, and it's especially applicable in algorithmic trading because, well, let me digress a bit. The algorithm with stop losses that we've been developing for several years now to create an adaptive one with stop losses set at, say, 0.5% or 1% of the deposit, and at the same time have it trade profitably over several years. That's a very difficult task, to be honest. It also needs to cover funding fees, commissions, and so on, if, for example, there is funding involved, etc. That's it. Accordingly, if the price moves against us in scalping mode, the algorithm automatically switches to what we call DCA mode, that is positional averaging. So don't confuse it with grid trading or with martingale. Yes, in that case, a larger volume is used compared to scalping trades, but the signals it captures are much more significant, meaning they are stronger. Naturally, it takes more time for such positions to play out because we are working with a higher time frame. And in our calculation, since you also asked about margin requirements, this margin, the full 100%, is controlled by the algorithm and is added to the isolated pair as needed to push back the liquidation point if, for example, the price drops. And basically, our volume calculation method allows us, with a 100% cushion, to withstand a momentary price drop of the asset from the entry point by 50 to 60%. After that, liquidation occurs, so there are no miracles here. But why did I mention at the very beginning the importance of, say, trading with 15 pairs at the same time? Because all the margin is kept in a common pool, meaning in your deposit. And if any algorithm needs more than 100% cushion, it will take it from another, from the one who doesn't need it at the moment. Because when we, for example, trade the top 15 or top 20 assets, let's say, and a black swan event happens, it's really hard to imagine a situation where all the coins drop 60 or 70% at once and you get stopped out. Well, take Bitcoin, for example. If it drops 70% in a single candle like that, I think we can just end the podcast right here, go our separate ways, and start working at a factory. That's it. And because of this, yes, maybe one coin dropped more. Somewhere he took more than 100% additional collateral, right? Someone else doesn't need it. So Because of this, the portfolio gains stability, yes, out of, say, 15 coins, as we recommend. Accordingly, viewers will have a reasonable question. You're not covering your losses, but your P&L is negative, and the coin will never recover in its life. For example, Luna turned out to be a scam, and as well. Yes, and Mantra recently turned out to be a scam in April. So what should you do? Our guys, for instance, traded Mantra both long and also traded Luna in May 2022. So what should you do? This is actually a very important question because, again, many algorithms simply don't have a solution for such cases. So you just have a drawdown and that's it. So what do you do, right? I mean, you can't really close the loss yourself, but it feels bad. And the coin will never go up again. Like, I don't know, it just crashed into a bear market. In this case, we have an additional algorithm, which we call the rescue bot. That is, a person activates it in their dashboard with the press of a single button. Of course, certain conditions are required for it. We provide training. We explain how it works, but the conditions are quite simple. So it's either a sideways movement or, well, that's the best scenario. For example, let's say the coin has dropped. As a rule, it still settles into a certain trading range. And this bot gradually trades through the entire drawdown, bringing it completely to break even. Is this on spot or on futures? We have this both on spot and on futures. So as I was saying, with the help of the rescue bot, even our guys, especially those who didn't really listen, because overall the top 20 coins still bounce back pretty well one way or another. And since after a drop of 30 or 40%, we use a higher trade volume, we only need minimal corrections for us, for example, to be able to go long on the second bottom. Then, for example, on the third bottom, that's it. But if a person still didn't listen, because most often people get stuck in drawdowns, like some dog in a hat or something like that, well, that kind of thing. Even though we say, don't trade, guys, you shouldn't. And with the help of the rescue tool, we've pulled people out of 90% drawdowns, and the guys have done it too. So yes, it does take time. Yes, after that, a person will think 10 times before getting involved with such assets again. But these kinds of tools exist.
Well, tell us about some case, for example, the OM Mantra recently rug pulled, right? There, I don't know how many percent it was, but it was a lot, right? A big drawdown. And those who were trading and used the rescue tool, how long did it take them to at least get back to break even?
Look, I haven't checked specifically for Mantra yet, but as far as I know, those who use the rescue tool still haven't gotten out. But they did manage to significantly cut the drawdown. So at the very least, a person can accept the loss. Because, well, as I showed you on our forum, the win rate is 100%, right? According to the exchange.
By the way, I wanted to talk about that too.
Yeah. And sometimes, maybe, yes, it really is worth taking a loss in certain situations. Although we say that the last thing you should think about is closing a trade at a loss, we have additional tools, so work with the asset, But in any case, the drawdown will already be lower. Yeah, I haven't checked on but I think the rescue hasn't pulled it out yet. So it's already been a few months since the scam happened. But in any case, I'm sure it's possible. And that's better than taking a loss, especially if it's a big one. As for Luna, as I recall now, it took about 3 months, I think, to trade out of the drawdown after the scam. But here, everything is very individual because it depends on how the asset moves. That is, naturally, especially if it starts to recover, the rescue strategy works even better. It trades through the drawdown volume even faster. And there have been cases when the rescue strategy managed to pull out the coin in just a month, for example. But there were also times when it took 3 or 4 months.
Look, let's say I allocated a certain portion of my funds, let's say $1,000 for a specific asset. This asset went into a deep drawdown, basically scammed, and at the same time, I activated the rescue bot. Do I need to add extra liquidity there so that it can keep trading this asset? Or does it use the remaining portion that's left?
Well, look, in general, yes, we say that you need to add more funds for the rescue bot to work. If, for example, you have 1,000 allocated for the algorithm's operation, you need 30% more, that is 300 on top of the balance so that it can function, right? Well, as it usually happens with us, users have money sitting in their accounts like a free cushion, right? The money isn't actually in use. And, well, I won't lie, many people don't really pay attention. They just kind of click, well, what? There's some free money there. If needed, I'll add more later. I'll just try to remember that I needed to top it up. And naturally, it will take from the cushion. Well, if there are available funds, it will use them to operate. But we tell everyone that if you want a safety net, just add 30% to the allocated amount, and it will, so it already needs funds to execute additional trades. But this is a solution. It really is a way out of many situations. So this is, well, that very working tool that allows you to get through, yes, difficult periods, because, well, even if you look at the beginning of this year, right now the market is basically just about Bitcoin. As for Ethereum, I won't even mention it at all. Altcoins, I checked, even the top altcoins from the December highs, they're down 40, 50, 60%, almost without any correction, right? Yeah, and well, naturally, if you're trading long and with the algorithm, yes, it has a very large margin for movement where it operates. That is, it's about 50%. So anything over 50% is already, well, certain anomalies, right? Market anomaly. Usually some events tend to trigger this. So our approach is precisely that we shouldn't lose money during tough periods, and in good times, we should earn well. And tools like the Rescuer are specifically designed to help get out of these difficult situations if they arise. But again, even based on the experience at the beginning of this year, when all the altcoins dropped, most assets actually closed out fairly quickly at the very first correction.
Tell me, do you have any kind of VIP service? Let's say there are clients with deposits of $100,000 or more, right? They don't want to bother with strategies, choosing which coins to buy, or rescuing positions. Basically, they just want to press one button, forget about it, and then periodically withdraw profits, for example. Do you provide any services to help set this up properly? So, and okay, not even 100,000. There are people with 10 or 20,000, but they also don't want to get too involved. As I understand it, for these people, you can safely recommend picking 15 to 20 altcoins from the top 20 and allocating the same amount to each, right? Go long. Well, go long because the market is currently growing. If the market changes, you can always switch these same coins to short, for example.
The clients we've had for a long time, yes, we still work with them. And in any case, we encourage them to be more independent because we deliberately moved away from trust management so as not to end up back there again, so to speak. Because, there are certain nuances when it comes to long-time clients. As for the period since we went public, we haven't introduced a VIP status yet, but we're actively discussing it because we might want to lower the commission for VIPs and maybe add some kind of concierge service for VIP users. Still, we stick to the philosophy that it's better to educate the user. After all, it's their funds on their balance, and they should be the ones primarily responsible. As developers, as a platform, our main responsibility is to ensure our product works properly, no lags, no crashes, and so on. So that's the first thing, right? If you understand how this could happen, right? Say you tell someone, trade these coins, but don't trade those. And then tomorrow, one of those coins crashes, like, I don't know, Solana, one of the top coins. Why not? Then they'll come to you and say, but you told me to do that. So what then? And how are you supposed to explain to someone that this is just how the market works? So first and foremost, you always have to start from the perspective of risk. That's why I don't think we'll create a service like that where it's just, here, take my money and you handle everything for me. But I will say that we currently have a pro status, pro users, right? It's a separate format and it works on an annual subscription. It's like an add-on, right? So a person can choose not to be pro or they can choose to be, it's up to them. Accordingly, there are 9 different privileges. There's a commission discount, access to analytics, a private chat, all those perks. And one of the privileges is having a help button for management in your account. That's it. And of course, it doesn't guarantee that there will be no losses because we don't control the market, right? We can't really influence it. We can only adapt to it. But at the same time, if a person enables and uses this button, then during certain specific market collapses, our admin, since we have a duty admin on call around the clock, will pay extra attention specifically to those accounts where this button is activated. And if necessary, we have some additional functional buttons, certain ones that can, in one way or another, help out in some difficult situation with the account. So that's what we have. Yes, previously this was available to everyone, but since, as I said, we started to grow actively and more users joined, it's simply impossible to provide this service with quality to everyone. I mean, it's just not feasible to monitor all the accounts, especially if someone, for example, has withdrawn half of their cushion. I don't know, maybe he needed to buy something for the house or something else. Everyone has their own reasons. That's why we separated this into its own kind of process.
Now let's talk about win rate. I've been testing one trading algorithm for 6 months now, right? But so far it's only working as a trust management service. Still, I've seen the account myself, right? And on Binance, you can see that the win rate is 85% over about 20 months. And even that seems, well, kind of unbelievable, right? I mean, that's a very high number of profitable trades. And yours is 100. When I saw that, I was like, how is that possible? So explain the principle why. 100, how is it 100%? Is it just because you never close trades at a loss since there are no stop losses and you keep averaging down, right? And at some point, the trade still ends up closing in profit.
Yes. Well, not always, right? So as I said, it's not a greed, not that kind of thing like a greed bot. Yeah, actually, it's all pretty simple. You said it right. So it's about not closing trades at a loss, right? So you could go into some dashboard and see, for example, a win rate of 99% with just one trade closed at a loss because the bot sent a close command and there was some slippage during execution, right, on the exchange's side. That kind of thing can happen. Well, maybe there's a small insignificant loss. That's it. But in the algorithm itself, in its code, there is no provision for closing a position if the P&L taking into account funding, whether positive or negative on exchange commissions, is below zero. That's it. So that's why, the win rate ends up being like that. And if a person doesn't get nervous, trust the algorithm, doesn't get the urge to close out during a drawdown and forget about it like a bad dream, then the algorithm will handle everything itself. Plus, as I mentioned, there are additional tools. For example, even the so-called rescuer, its job is to bring the algorithm above the break-even point and close the position there.
Regarding the win rate, let me just ask one last question. If trades are not closed by stop loss, what was the longest losing trade in your history that the algorithm held on to and eventually closed in profit? Do you have such statistics?
Listen, I can't tell you the exact number of days, but I know there are accounts where a position in some meme coin that everyone has just forgotten about has been hanging there for, I don't know, half a year. But the problem is that the person isn't doing anything about it. He doesn't even turn on the rescue feature. We have, for example, a button that lets you manually average down if you have additional funds. So, for example, you can do it like this, yes, through the interface. That is, the person doesn't do anything there. The coin turned out to be a scam. So basically, he didn't follow the basic recommendation, right? In other words, he enabled something like that. Well, we're not magicians here, right? We work with math, we work with probabilities, with certain ones. If a scam happens, and most often it happens somewhere out there, then, well, what exactly was he expecting? It will never reach break even. And on top of that, he doesn't do anything manually. It could hang there for a whole year and his funding will just keep going back and forth. I can't give you an exact time frame, but there are definitely examples of it lasting for half a year.
This example is on spot, right?
No, on futures.
On futures?
Yes. So he doesn't even have a liquidation. Basically, he has enough margin, but as for reaching break even, just forget about it.
You wanted to talk about some new robots, right? The ones you launched today or yesterday?
Today,
I saw your little circle in the channel too. What's that about?
yeah, we actually listened very carefully to our valued users, you could definitely say. However, this isn't really some brand new groundbreaking development either. Here, we thoughtfully combined this particular algorithm, the one with the integrated stop losses that we currently have in place, because it's kind of our fundamental and most basic one. Why do we say top 15? The user actually only chooses, well, just one algorithm. We only have one plus the coin, the amount, and to start, right? Nothing else. And the algorithm with stop losses that we're going to have, it chooses the coin itself. The direction long or short, it's only for futures. And accordingly, it enters with a stop loss. So there, the user only needs to allocate the amount. That's it. But since for now we're mostly not using testers, we're mainly working on the live market, right? So to refine things and deliver a quality product to the user, we decided to make a sort of hybrid to combine the algorithm we currently have. Yes, a stop that preferably trades on top coins, right? So DC uses a scalping mode without stops and accordingly entries from this new algorithm. And we've ended up with an algorithm that selects the coin itself, looks for situations on the exchange, and accordingly chooses the direction long or short on its own. That's it. So it tracks certain market anomalies, volume spikes, some price patterns, right? Recurring ones. Or for example, when a coin has grown by 200% in a day and then starts to get dumped, it can short it, for example, very effectively, right? That's it. And accordingly, it also enters all sorts of junk coins. So there aren't even any top 50 coins there because they don't have the kind of volatility it needs. And today we've already released this algorithm, meaning we've made it available to users. This is basically a paradise for gamblers, so to speak, because it trades coins that I honestly have never even heard of. The returns it shows are insane, but the risks are just as high. So you have to understand that there is also a safety net there, just in case. Yes. So we've added all these features as well. But sometimes maybe, yes, it might actually be more interesting for the user to just accept the loss and close it, right? For example, if the bot entered the long position, but it turned out to be the peak, and then the asset started to drop. Well, in that case, it might make sense to just force close the position and start over. It will find another opportunity and quickly recover because the profitability will, from all our testing, honestly, it's almost unbelievable. I'm actually a bit embarrassed to share the numbers with the audience because I always try to take a conservative approach. But here, well, let's see now how users will react, whether they'll appreciate it or not. So, this is a tool for those who like to try all sorts of things. While we usually say, no, guys, build a portfolio of the top 15 or top 20 coins as your main holding, and you can allocate about 10% of your deposit to this, just to add a bit of excitement. But don't go overboard, right? Or it's a solution for low bankroll traders. So let's say someone has, 500 USDT. Well, they'll run just one pair with us here. If he picks the right pair, it might bring him, say, 20 or 30% on the allocated amount in good months, right? But if he chooses one that's not so great, like, say, Ton, where sometimes there's news and sometimes there isn't, it doesn't move much, then he'll just make 4 or 5% a month and feel disappointed. But if he turns this on, it'll probably feel much better for him. He'll grow his deposit, and then he'll probably start trading more conservatively.
Well, I think it would be better to just create a sub account and deposit funds there separately. Are you recommending 10% of the deposit that you're trading with in your conservative strategy? For example, I put 5,000 into the conservative strategy and I threw 500 bucks into this one just to check the stats. It's interesting after all.
Well, that's how I would do it, yeah. So my personal risk management is that for risky ventures like this, I'd allocate about 10%, or for some people, maybe 20% would be more appealing. It's all very individual here. There's no specific recommendation, but definitely not your entire deposit, not 100%, especially if your deposit is large.
All right, you know what else I wanted to ask? So, is your role in RoboTraders to promote and scale the project? Or are you just very technically savvy? Because I can see that you really understand the inner workings and I wanted to know, do you write technical specifications for the developers? Or are you also a tester yourself there as well? Yeah, or, well, tell me more about your role in detail.
At the moment, of course, my main focus is on media presence and publicity, going public and talking about our product. Yeah, but naturally, I know all the inner workings from the inside because I've already dedicated many years to working with the team. But to answer your question, for example, I'm not a programmer. I don't write code. I don't even get involved in that. I don't delve into it because that's, well, a separate group of guys. I'm not really connected to that. But right now, at this moment, it's more about media for me. So that the project has a face so that we can present our product, right? In other words, we explained how things can be and how they can be. Because the most important thing, let me digress a bit, is to understand that there really is no gray. In trading as well, a lot of people mistakenly think it's a money-making button, but that's not the case. It's a tool first and foremost, right? Which, if you follow the main rules naturally, risk management can become a source of passive income, and quite a good one at that. That's it. But unfortunately, a lot of people forget about this. And precisely, yes, my mission as I see it is not to go around shouting that we have some amazing robot, that we've created something on a new algorithm, making 100% in a month, and it's just super. But first and foremost, even on all our streams, if you go and look at our chat, we have an open chat. You can go and read the reviews, see everything for yourself. On every stream, I practically say every other word. Guys, trade the top 20. Remember risk management, your safety net. Don't overexpose yourselves. Play the long game. That's the most important thing. Just constant. Because if we wanted to hype things up, we'd be shouting like, go all in, trade this coin or something like that. But that's just not our style at all. Our motivation is simply different. If the user loses everything, we don't make any money.
About the safety cushion, you mean besides the capital that's managed by the trading algorithm, having some extra USDT set aside somewhere, right? So you could add more if needed. Or is it that the total amount, like those 200, is already split up that way? I thought the safety cushion was already included in there.
Yes, that's correct. By safety cushion, I mean those 200 plus another 200, that's the cushion. Again, I won't hide the fact that some of our users, for example, trade with a cushion of 70, right? And they feel like they always have it on hand. Well, they really do have some USDT on hand somewhere, and if needed, they can quickly add more. But the nuance here is that most often scams and dumps happen at night when people are asleep. That's the thing. So in this case, it might not work. And some of our users trade with a cushion of 120, some with 150. It just makes them feel more at ease. And the returns on their entire deposit, even with the cushion, are more than satisfactory for them. But if someone has a large deposit and say 70% per year is enough for them, for example, why then go for all these extremes? That's the point. But basically, even on our streams, we tell people, listen, guys, the cushion should start at 100. So 100 is our recommended minimum that you should use. Ideally, you should have 20% of your total amount set aside just like that. Yes, you just need to have it. Not so you can top up somewhere, but for example, in case you suddenly need to connect RM, you have some money, right? And you use it.
What is RM?
The rescue bots.
Hmm.
Maybe you want to manually average out some position, say at the bottom. You have some money and you can do it calmly, not from your safety cushion like everyone else. That's it. Basically, when the market is crashing, if you're not trading with your last funds or, God forbid, on credit, you still have something left. It's psychologically easier. Because psychology in algorithmic trading, as I've said from the stage as well, many people believe and say that algorithmic trading is trading without emotions. But that's not true. Not true at all. Yes, algorithms trade without emotions, but people still have emotions when they see a drawdown or a loss in their account or something else. They start to get nervous. And if it's their last money, the nerves are twice as bad. Here's just a very concrete and compelling real-life example that comes directly from one of our valued users, who also happens to be a close personal friend of mine. He was actively engaged in trading a substantial number of cryptocurrencies, specifically either 50 or perhaps even 80 different digital coins, demonstrating a significant level of involvement in the market. All of them, he basically had the whole spectrum. So he had that many algorithms running. Plus, he took part of his safety cushion. The cushion there was about 70% of the allocated amount in the cushion. He was buying things for his home, a television or something. Well, he was buying something. And then that drop because of Iran started. His deposit held up. Then the next second bottom was in June, in the summer. And the final third bottom was on the 5th of August last year when the market was being wiped out. His drawdown was almost 100%. He lost all his coins, his entire cushion, which wasn't enough. And he had a pretty decent deposit, right? And he called me in a panic and said, what should I do? And he was close to liquidation. There's this metric we have showing how many percent drop is left before the position gets liquidated. He had about 3, 4, 5% left on his positions. If it dropped that much more, they would have been closed. I said, listen, I don't know what you should do. Well, if you have a backup cushion for averaging down, he said, I don't have one. In the end, in a panic, he just started closing everything using the basket button, post-closing the algorithm's positions at market price. As we later saw, that was the market's point of maximum pain. That is, it was exactly the moment when he called me. He exited right at the very bottom at the biggest loss. If he hadn't done that, maybe 1, 2, or 3 of those algorithms would have been liquidated after all. We have isolated margin. So it wouldn't have been a liquidation of his entire deposit, and he would have preserved it. So even someone who broke all the recommendations would have survived that drop. Yes, things could have gotten even worse, and then he would have lost everything. But psychology kicked in. So this is a real life example. It reminds me of that meme, where it's like buy, take profit. Exactly. Regarding the maximum deposit, what is the largest amount you currently have under management? Well, that's connected. I can't tell you the exact deposit, but I can say that one of our algorithms easily operates with an allocated amount of 30,000 USDT. One algorithm? Yes. Back in the days of asset management, we just worked through a sub account. Why? What's the secrecy about? It's just that, for example, I had people in my circle who could even put in $1 million if the algorithm performs well. And they need to understand how much they can invest, right? Well, let them invest, everything will work. Like I said, we worked with large sums, we might not be as simple as we seem. There is certain information we don't disclose, especially when it comes to a lot of technical details. You yourself, I think you understand why. So, it's just not really part of our philosophy, like that. I just watch and follow other similar projects, Those who do the same thing often show their numbers. Like they'll show that, I don't know, their algorithm is trading $5 million, for example. I get that it builds trust, but we still stick to a certain level of confidentiality. And we have demo accounts, right? You don't like it when I call it that? By the way, remind me, what did you suggest we call it? Public account? Yeah, we should probably change that. Please feel free to check it out. So the algorithms guarantee, and we guarantee that it works even with a large deposit because we have that experience. And so I pointed out we exclude low liquidity coins because basically, the code doesn't care what volume it opens on. The main thing is that there's enough liquidity. That's it. But how much is a person willing to trust? That's a question for them. So if they're willing to trust $1 million, the question is that just 1% of their total deposit, or is it 10 or even 100%? So as developers, we will ensure the system's operability. That's our first key task. But how much is a person actually ready to commit? Again, you have to remember about non-systemic risks here. There are quite a few of those as well. It could be, for example, scam coins, right? No one is immune. It could be a scam exchange. So right now we have 2 exchanges. We're connecting a third one, among other reasons, so that users have the option to split their deposits across several platforms and trade simultaneously in a single dashboard, say on 3 exchanges at once. Right. So that's something you also need to keep in mind. All right. I had a few more questions while you were talking, but I forgot them. But for now, let me ask you about the second founder. There are 2 of you, right? You have 2 founders, correct? What is his role? And is he a public person? Does he have any social media accounts that are banned in Russia, or is there anywhere else people can check him out? Or are you the only face of the company and everything else is kind of shrouded in mystery? No, he's not a public person. So I'm the face of the company. I won't say much about him. I'll just say that he's our technical brain. So when it comes to the core development, he's the one who started it all. Is he a developer himself, a programmer? No, he doesn't write. He doesn't write, but he kind of generates ideas. Yes. That is, he himself is a trader with many years of experience. He has been trading on the fund since the 2000s, and he has a lot of trading experience, let's say. This is his. That is, he himself, doesn't write the code. Yes, he knows mathematics very well. And in general, a very smart person. Fine, I remembered my question about the public account, but when you show it like that, it's one thing. But from experience, I can say that market professionals always require an API key to read an account. Do you provide this API key? No, we do not provide it. Moreover, our goal was never to create any kind of public monitoring. Maybe we'll get to that and do it so that It could be shown somewhere else because, well, back in the days of asset management, there was no such task. The people who came there, they truly trusted us implicitly. You could certainly say it was, as I previously mentioned, a kind of rather closed club, so to speak. When the significant idea eventually came up to go public, we collectively decided to create a comprehensive public account. I genuinely think now we will also upload several more extensive years of our detailed trading history there. So you'll be able to click on a day, open it up, and see the trade show the opening and closing times were handled, the prices. So if there are skeptics who don't trust it, that's perfectly fine. We prove ourselves on the market with our results and what we deliver. Right now, I'm putting in a lot of effort there. But what's so difficult about providing an API key if it's your client's account, which has been trading since 2022, and he's willing to show it? The trades will just be exported, and you'll be able to see the P&L. That 100% win rate, right? I mean, this would actually give you a strong boost in attracting people. I'm not refusing to do it. Well, by all means, it's just that we haven't had such a request before. You're probably the first person this year who's actually looked for a public key, but if he doesn't mind and we see this request, then by all means. Well, as you saw yourself, I opened it right in front of you and showed it to you. So in this regard, I'm just saying there wasn't really such a goal. I mean, there just wasn't a specific request for what needed to be done. Honestly, I hadn't even thought about it. Well, there's a demo version, go ahead, check it out, even every day without logging in.
It would just be cool if I could even send you 6 monitoring tools that I know of. These are both foreign and CIS monitoring services that people trust. And you can just upload the API key to all 6 of them and integrate it into your personal account, like, well, make it a public account. Maybe you could even give your client some bonuses for doing this, right? There's no risk for them here. It's just that the information will be pulled in there. But you won't have to show this account like this all the time. Or you can make your account an internal company account and connect it to the monitoring services. Well, in my opinion, this would just further increase your client's trust in you, and more people would come and connect.
If you send it over, I'll be glad. And as soon as I get home, I definitely will. I think we do it. But, we always try to maintain a certain openness with the client, right? I mean, just normal human communication. So there's really no goal to hide or conceal anything, not at all. I'll only be glad if this idea really helps, and I'll definitely thank you for it later.
Well, I think we'll wrap up the podcast here. I've honestly asked all the pertinent questions that have come to my mind, and I genuinely don't have any more at this moment. So if you, our valued viewers, still have additional questions, please feel free to write them in the comment section directly under this video, and I will certainly ask Dmitry to provide comprehensive answers to them in writing for everyone to see. Thank you.
Thank you, Ian. Thank you.